after 10:30 in Honolulu, 4:30 in New York on Monday, the 3rd day of February 2014, and this is the daily report for gold and silver. Equities markets literally falling out of bed. They were down. Dow Jones Industrial Average was down over 300 points at the time of this recording, down about 288. Dollar is lower today, and metals sharply higher, although well off of their highs, as you can see. 2-hour chart that we're looking at, current print, roughly 1256.90, puts it up $10 to $11 on the day. You can see the high at 67.40 on the high, and the low 1240.00. You can see this dynamic move that we witnessed, and that's after a report on the PMI came out that was not favorable to the equities markets, favorable to the precious metals markets, specifically gold, as we see a return or a flight to safe haven investments. As we look at silver, actually up a little bit over 1% as we record this morning, 1934, the low 1903, the high 1974. You can really see this spike up, but then it gave much of it back on this hourly chart. More on silver towards the end of the show. Although we have come off of the highs that we did reach this morning in both gold and silver, in terms of a technical basis, this to me is a very, very bullish sign. We talked about the fact of the double bottom. We also talked about the fact 2 weeks ago that we had a major breakout above that long-standing resistance line, but quite honestly, we teetered last week. We didn't see the kind of follow-through I was hoping for, but we absolutely are getting that follow-through today. Once again, we're looking at this 120-minute chart, and in terms of resistance that we're going to be looking at, you do have a couple of tops that came into the market. This top, of course, at 1278. This top at 1267. You can see that this market, let's put our line in for this short-term 23% retracement. You can see that the high falls just underneath that, but we do have a series of tops that this market will have to excel and trade above if we are to see a continuation of this bullish run. The other thing that when we look at this short-term chart, we also talked about the fact that we had a series of lows. As these lows came in, we had a series of higher lows up till last week, and then last week we had this one low here, but the following low after that, and you can see this base forming or congestion area right in here. I believe that it follows suit in terms of support resistance areas to these three areas that we're outlining. You can see they're pretty much all in the same area. Let's just draw a line so we can see that, but we've got these different defined areas, and I believe that those defined areas are our new level of support. I believe that our new level of support now runs roughly at 1242. Now, I know that a lot of traders are curious and are asking about the equities markets, where we could see this market drop to. Will we see a continuation of this drop, and how severe could it be? We're looking at a weekly chart. This is the Cash Standard & Poor's, and on this weekly chart, I've created 3 distinct fib retracements, and they all fall from, or begin, I should say, after a rally and then the subsequent sell-off. So here, roughly at 1074, another one at 1267, and then our final one comes in at around 1334. Of course, I'm looking at different areas. Now, the 23 level of retracement for all 3 of these can be defined by this particular band. And so when we look at this is going to be 1736, 1665, and 1710, all on the weekly S&P. So in terms of any kind of an area that we would look for support, the first area could be as early as 1726, but a 23% retracement of this longer move. And when I say a longer move, we're literally looking at the move from October 2011, when the market was trading just over 1,000, all the way up to this record top at 1847. When we consider that, our 23% retracement takes us to 1665. And that would be a sizable drop in terms of the marketplace itself. So we are under pressure. We also have the debt ceiling, which needs to be addressed over the next couple of weeks to pay the bills, and we'll see how that, if at all, plays into the overall dynamics of the market. My sense is it very much could do just that. So overall, on a technical basis, and let's go ahead and kind of blow this chart up just a little bit, how does that affect us, this recent activity? As you know, we talked about the dynamics and I believe the critical importance we have with this long-standing resistance line. We absolutely had a break above that. This is our daily chart. Following day, we really didn't get a whole lot of activity. In fact, if anything, that's a doji star in an evening position. Evening position, of course, is above the open and close bar, that range, and in the morning position would be below that. This was followed by some downtrending markets. Those downtrending markets basically put us back to, but not below, the area that we were looking at in terms of that long-standing resistance line. Now, with that in mind, you can also see that this most recent activity, today's trading activity, has really begun, interestingly enough, right at the kind of crossroads, right at this resistance line, and has traded effectively higher. And if we then kind of compress this back to our chart so we can get our whole range in, and of course now we can't see that candle as well, but we can see that there's absolutely no question. This is a real long-standing resistance line, no doubt about it. It's formed from the tact or the angle of this market activity way back in 2012, 2013, last time the market traded really at 1800 before its fall from grace. It effectively told us that we had real resistance on this one dynamic rally. This is the major rally that we experienced in 2013. It also dynamically pointed out the next top that came in, and this really started, October of 2014, and then from there it really hit this brick wall and then began to trade lower. Interestingly enough, as it came in, it did double track the bottom. We had this significant double bottom. However, what was really different is on this particular move, we saw it break above that. And that's what caught my attention, and that's what really got me bullish in the marketplace itself. It's even more dynamic and interesting when we look at our weekly chart, standard candlestick format. Each candle equals a week. We look at this long-standing resistance line, and here you see it pop up. You see last week it goes solid red, goes right back to the line, and then we had this open below the actual close that we saw. 1240 was our low today, and then from there, this market really began to take off. And what I find most fascinating is that we really are seeing some activity right within this particular point. So what are our current support and resistance levels in terms of an interim basis? And one of the easiest ways for us to do that is to pull up our half-a-day chart, standard candlestick format. It's quite apparent, as we talked about before, we have this top here. This is roughly at 1282. If we look back in terms of any kind of historical perspective short term, let's line that up. Really, the only thing that we see is this particular move down that the market made very, very recently. This is back in October, November of last year. And that's really the only technical point we can make. So we look at that, but we also start looking at our different fib numbers. So 1282 right now, that's a pretty important number. And then the next real level, of course, is going to be to break back above 1300. You've got a 76% retracement at 1299, another one at 1309, and then 1324. So in terms of where I believe the market has the ability to go to, not necessarily will, but I'm looking at the upper level of a range of about 1320 right in here. And in terms of a low end of the range, these are different resistance levels. We're going to touch upon one roughly between 1282 to 1285. And lastly, I want to briefly look at our silver market right now. We've defined this market really differently than gold in that we've been trading within this particular band here. When I say band, we're looking at these series of highs as being our absolute resistance. And we're looking at this $1,900 level. Just above it is as our support. So in terms of the upper end of the range, silver doesn't act as much like a safe haven, of course, as gold. It is an industrial metal also. And therefore, we're seeing this dynamic range in the marketplace itself. My sense is that it will track higher, but I believe that on down days, it will be a percentage winner in terms of market loss. And on up days, I believe that it could in fact hold a second place to gold, which I believe could in fact be the percentage gainer on the way up. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow on Tuesday for another daily update and review. By the way, on Wednesday at 4:30 Eastern Standard Time, I will be doing a live webinar. Of course, there's no cost to it, but I will include a link on our email today, as well as send out notification. Love to have you join us. It's going to be anywhere between a half hour, 45 minutes, and I will be covering in detail my outlook, both short-term and long-term, for 2014. Hopefully, we'll see you there. Bye-bye.